Out of 100 people, 4 will get the message.
The thing is, when the markets are doing well because of fake money, it's very different from them doing well because companies are producing, or because wages are, keeping up with inflation, or because consumers are buying, or because of any of the things that create a long-term stable economy, including growth, including development, housing, infrastructure, all of those things that require real money, real investment, and have real growth. When you're just investing in financial assets, which you can't touch or feel, because the money is so cheap and just available from central banks, well, then that's the result. The markets get ahead of the real economy, and the real economy just can't catch up because it doesn't have that kind of free money. And that's what we're in right now. But now we have an inflation problem because of various reasons, including the fact that the Fed forgot inflation was happening as it was rising. Called it transitional. But even if the Fed can't affect inflation, people are feeling inflation. And now they're seeing rates creep back up, and that's hurting the average person's ability to even buy a home with a mortgage right now. So whatever the Fed does, it winds up hurting the sort of average person and the real economy.
So what that causes what we call the everything bubble, where real estate goes up, stocks go up, and bonds go up. And the trouble is it only makes the bankers richer.
Because they don't care. It's like a hate-seeking missile, right? They're going to find where the money is hottest. They're going to leverage that money because it's cheap and available. That's where the bankers go. That's where their friend investors go. That's why BlackRock, who's sitting on a $9-10 trillion book of assets, will go. It's where everyone who has the ability to get money cheaply will push that money. And they want it to make money fast. They want money to reproduce quickly. And in that way, they want money to be like a virus, produce quickly, reproduce quickly. But that doesn't mean it has the staying power to create that long-term money flow. Like, I know you look at this a lot, that cash flow on a long-term basis, say from real estate, or just from foundational growth of the economy. It's in and out. It's just in and out.
Professional investors do something called hedging. They have small investments that protect the large investment. Car insurance is a hedge. Home insurance is a hedge. I would just invite people to think about this. How much money have you spent on fire insurance for your home? But what do you think is more likely to burn down in the next 12 months? Your house or your 401k? And are you insured? I like the idea of preparing rather than predicting. So I say it could go up, it could go down, we could have inflation, deflation. I think the least likely scenario is that it stays the same.
We know what they're doing is bad. Bernanke gets up there and he says, we have a thing called a printing press, and that's why they call them Helicopter Ben. The stimmy checks were helicopter money from the banks, Treasury and the banks. I mean, the Fed.
Well, that's exactly right. If the Fed hadn't stepped in and created money at that moment, that money would not have been available. It is about the Fed basically, sort of moving some digits on a computer, creating this sort of fake money, and then buying bonds or buying the debt of the US government or of the housing market or whatever it might be with that fake money. And that creates this additional bubble. The individuals who got very rich at the banks could hide within their banks. If Goldman Sachs, for example, paid, which they did, a $550 million fine for some of the stuff they did to the housing market back in the financial crisis days, that money didn't come out of the pockets of their CEOs or of their executives. It came out of sort of their corporate till. So in that way, the people that work for these large banks and large institutions can take advantage of all this cheap money as well through the shares or the options they own in their own companies. And if something goes wrong, like something illegal, we bail them out.
It's called the shadow banking system. There's a public system, which is where all of the employees and doctors and lawyers are at, and they're always in the public market, stocks, bonds, mutual funds, ETFs. But the real money is made in shadow banking, which is private equity or private credit. And the reason I like real estate is because I'm an inside investor. So I invest from the inside. And those guys in the public markets stocks, bonds, mutual funds, ETFs, they're from the outside.
So many people want to get rich, but they have horrible teachers. And then they work for fake money. The US dollar is fake. They print trillions of it every month or day. And then you buy these fake assets. I don't touch that stuff.
Because more central bank money is going into the stock market. That's just the reality. So the economy is actually deflating as we speak, even if the price of wheat or the price of oil or even the price of gold are going up. As an investor, as someone who's not wanting to be dependent on an employer, and we all saw how well that worked out during the pandemic for so many millions of people, you have to be nimble, you have to get educated, and you have to both move yourself forward in your investments and protect yourselves from what happens when things go south.
Can you make more money when the market crashes?
Yes.
That's what I'm waiting for. I get stimulated thinking about a market crash because Kim and I get very rich during market crashes. And the Fed is terrified right now because if this bubble starts deflating, we're going to crash. And then they're going to have to do stupid things.
They will make money when the market goes down. They will make money when the market goes up, and they will make money on all the people and all the companies that are getting caught in between those moves. And as an individual, that's why we have to be doing both, and we have to be investing and learning in such a way that we can do both. I haven't had a 401k since I worked for Wall Street. When you're relying on sort of an external corporation, whether it's one you work for as an employer, which I haven't done since then, I work for myself, or if you're working with a 401k sort of planner and you're not doing your own thing, you're not paying attention, you're not learning, you're not investing, you're not getting yourself to understand all the different avenues you have to make money, whether certain markets, certain sectors, certain asset classes, whatever, go up or go down, and prepare yourself, because it's not that hard if you take the time to get yourself educated and if you actually do it.
It was Marx who said, we must have a central bank. It was Lenin who said, if you want to destroy capitalism, you must debauch the currency, which is exactly what Nixon did in 1971. Lenin said, if you want to crush the middle class, you grind them through taxes and inflation. And that's what we're doing. How do you protect yourself from Marxism taught in schools? You prevent being crushed by Marxism taught in schools by teaching capitalism at home.
I've followed central banks for decades, and what I've seen since particularly the financial crisis and then the pandemic is just central banks on complete steroids around the world, and really dismantling that relationship between the capital markets, the free markets, and the real economy to an irreversible extent. And that's why I call it now the permanent distortion. The Fed creates money out of nowhere. The Treasury Department borrows money from the future. The two of them collude together to allow that borrowing from the future to be subsidized by your graph right there, by creating fake money and not necessarily working with the real economy to help entrepreneurs, investors, young people, etc., basically move forward, because they're really fighting against this tidal wave of fake money coming from those institutions.
That fake money goes into the CEOs of Wall Street and they buy back their stock, which makes the stock market boom, but that money does not go to increase production. See, true money comes from production. Like if I'm a farmer and I produce cabbages, that's production. But what the Fed does against the money, and these boys in corporate America take that money, they buy back their stock, and they parachute out under capital gains. It's a total collusion with Wall Street.
What the Fed was doing was global. They created over $24 trillion worth of basically fake money out of nowhere. And they said it was to help the real economies. Well, at the end of 2019, the real economy was slugging along, basically barely alive. The markets were super zooming, which is great for the people invested in the markets, but not great for anyone who wasn't. And all of these central banks were taking a victory lap. And then come the pandemic and we all see that, the facade is really still the facade, but then they doubled down.
My concern today is for Kim and I, our real issue is social unrest. The gap between the rich and poor is now excessive. And that leads to revolution, civil rioting, and all this. When you print all this fake money and you rig it for the rich only, what that produces is a wave of intensified and widespread social unrest, disjointed political upheaval, dangerous extremism, punishing trade wars, and sweeping isolation.
Yeah, so what happened was, as we know, after the financial crisis, everything got crazy disjointed between the markets and the real economy already. And that was because the Federal Reserve stepped in and they basically created out of nowhere $4.5 trillion worth of money. I mean, wouldn't everybody like to press a button and do that? As well as they brought rates down to zero. And what I called a collusion was they basically worked with other central banks around the world. So Bank of Japan, European Central Bank, etc., to really do the same thing. And so for a while, the world was floating on this fabricated, this fake money. And what that created was a situation where financial assets appreciated, it went up, markets went up ultimately, but the real economy very much dragged. And that was going on for years. And the result of that sort of culminated in 2019, where we had a year of the most riots, the most civil unrest, and the most general upheaval economically. Even after all this year of fake money, all these years of cheap money, it was considered the highest year of that kind of unrest until now. And so what happened after 2019 is the Fed went back to zero interest rates. They had raised them a little bit, and then they dropped them back down. Right now we're seeing them raise again. So they do have this ability to go up and down with rates when they feel like it and to create money when they feel like it. And then the pandemic happened and the Fed created another $4.5 trillion worth of money out of nowhere. So now the Fed's sitting on $9 trillion of giveaway money that flows into the markets, that creates an appreciation of assets, financial assets all over the place, but again, leaves the real economy behind. And now what we're seeing is the Fed's going back on that. It's raising rates a little bit. It still has $9 trillion worth of assets. It still has that money in the market, but now the economy is starting to slow down. And so what we're seeing time and time again is when the Fed gets involved, it helps the markets, it helps participants in the markets, and up or down, it leaves the real economy behind.
Well, always remember, America has stopped producing products. We produce bubbles. Now, the good thing about a bubble is when they burst, everything goes on sale. And so when in 2008, I waited till about 2010. I borrowed $300 million because debt is money, as you know, after 71. And I began buying real estate at bargain prices. So just recently, the repo market inverted again, which means we're going down. It means recession's ahead. But my concern is now revolution, because when people can't afford to eat tuna, we're going to have rioting. So it's a whole different type of bubble burst. When Biden took us off the pipeline, oil prices went up. Oil produces fertilizer. And when fertilizer is no longer cheap, people can't produce food. And the average American has nothing. 40% of Americans have nothing. Inflation is going to make them very upset. A stock market crash will bring down the baby boomers. So we're in serious trouble here.
See, what happens in a revolution is the middle class can't go up anymore. So they start to come down. And then it crushes on the poor. And that's why this book here, written by Karl Marx in 1848, is coming true today. I'm not against unions, but unions are Marxist. Workers of the world unite, Karl Marx. It is censorship, it is totalitarianism. It's just like, Trudeau of Canada, he shut, I don't know what else he's doing, take money out of banks and all this. when is this going to end? And my poor dad was head of education for the state of Hawaii, PhD, Stanford, Northwestern University, Chicago. He knew nothing about money. And when I read this book here, The Communist Manifesto in 1965, because I went to military school. And in military school, they said, you have to know your enemy. And I realized, I hate to say this, but most of my friends and family are communists. They just don't know it. They're anti-rich, they want to tax the rich, and they're pro-union. I'm going, holy mackerel, and they have no financial education. And you see the gap going so big. My concern is what I can get into is revolution.
The baby boomers will be the biggest losers because they've been taught not to make mistakes. And they haven't lost yet. They've had it so easy. You know, that when they came into the market in the 70s, the stock market was taking off, housing market was taking off. You know, the US came off the gold standard in 71. So the baby boomers are going to get the biggest shellacking of all generations. It's really sad. I can see it coming.